The market just issued two big warnings. That's the SPY from Friday to today. And then also, if you're not familiar, here's TLT and the inverse of the rate. So these are two very, very big indicators or warnings from the market, which are kind of difficult to interpret. Today, the markets were all over the place, but surprisingly, we didn't have that much news. So I want to go over the few small things that happened. I want to talk about what the markets are setting up, even really more information on the yield curve, what this TLT means, what it means for finance stocks, and overall, just how the stocks have moved. And today, again, the other one, it's called the down Friday, down Monday indicator. So if you guys have been subscribed, last time we talked about this was in October and November and December. Last time the yield curve inverted, I'm going to show you guys it came down to December, and there's a lot of issues to talk about, which we covered. So I'm going to get into that. Before I do it, throw a thumbs up on this video if you like it. You want to see more content like this. It makes YouTube know. It lets me know. Subscribe if you're new. And then also, do not forget to join the live stream. We are live streaming Monday through Friday, 30 minutes before open till close. Another 7-hour stream. It's in the comment section pinned. It's in the description. It's in the corner right here. No excuses. We're doing 500 people strong. So if you guys see the benefit in that, honestly, having all those eyes and people there, it's good to have there. And I'm posting a watch list tonight on this channel. So that's where we update it to even while we're doing that live. So make sure I see you guys there. Let's go. I'm honestly so hyped. The chat, it was good, but today was an interesting day. So let's talk about it. The first one I'm going to discuss is the down Friday, down Monday. And I'm going to go over this quickly because it's just an interesting, weird technical. Why it's so important? Because again, SPY closed on down Friday and down Monday. Now, so the fact that this happened, the whole point, actually, let me turn off extended hours. Maybe we could see a different side of the story. Let's see. Yeah, it's right. Where did we close? We closed there. So we're just below, and this is why I said it was confusing. And if you were on stream, even then the Dow, The Dow ended up closing positive, and the Russell was up. And that, if you watch the watch list, I said it's going to be a game of laggers and leaders. IWM led, and the Dow has got pushed up by Boeing there at the end. But this is important, though, because we got the down Friday, down Monday, but the difference is between most times, this is a week down Friday, down Monday. So I'm saying this to keep up with it, and pretty much you guys could go look up what a down Friday, down Monday means. Historically, you only get this every so often, but it could indicate volatility. So a down Friday, down Monday could indicate more volatility, and chances are you're going to see in the next 2 weeks of trading data a lower low set from where this was, or on the opposite, it also could mean a higher low. So this just signaled a bottom, or this signaled a top to a degree. But again, it was such a weak indicator. And that's what I said today on stream. We're looking, I wanted it to close stronger, because the fact that it closed so weak, it's not a good sign that happened. Because if the market closed really weak today, we'd at least know there's more bearishness. But the fact it kind of did all of this motion was one thing. So again, it got affected by Apple, and that's another thing before I talk about the TLT. Apple had some, they sold the news, it bounced. It was really good news. They announced they're getting into the finances. I might make a video on that for all the Apple long holders. So if you're Apple long, you want to hear my thoughts on this, let me know. But that had some implications. However, it still got the market down. There was Dow components like Boeing that brought the market up, Home Depot and Caterpillar. So that is the next thing that was leading. So IWM and now some of the Dow components like Caterpillar and now even Boeing, if those drop and we see financials weak, that's going to have the next effect. But now here's the main thing of the day, because there was also Nike too. I say watch that. Apparently, Michael Leventi is going to release something at 11 tomorrow. Right when he issued that, the stock went down. Let me pull it up. It was actually a crazy, crazy ride, because it dropped and then it shot right back up because he got charged almost instantly by the government, or they're saying he was trying to extort Nike for $20 million. So crazy news, but I think this is some drama. You're seeing the volatility in the stock, and watch it. But now here's the last part, TLT. So this is an inverse of the rate. So when TLT goes up, that essentially means rates are going down. And now here's the problem. The rates going down is inverting the yield curve. Go watch the video. If you watch the main video on my channel saying my #1 stock market prediction for the crash, it is looking at the yield curve. And now it inverted again, and this is the main point. Take a look here. This date right here, what is that? December 4th, December 5th. This was the last time you saw the yield curve literally just shoot up and continue to go. And I said it also in a video. Let me pull up December 4th here on the SPY. But there's TLT, so you guys are watching it. But let me pull up, here you go. Take a look. I believe that's December 4th now on the SPY. That's December 3rd. So December 4th, you see what happened. The market went down, and it was an inverse. This was the last time it happened. So TLT going up, the only time we see a crazy gap and run was literally these last few days after it happened. So now it's doing that from new highs. The 10-year hit a rate literally below 2017, which is very, very important. Now let me show you guys here. Oh, there's the chat. Look at the chat going crazy. 500 likes. Oh, I love you guys. You did great. But yeah, I better see you guys in there tomorrow morning. Here is, let me refresh this from CNBC. You guys could just Google bond rates. This will come up. But this was the primary issue today. The fact is the curve went crazy. So the TLT went up. All of the longer term rates started going down. Even the 30-year dropped. But now the 10-year fell even further below. And I said if the 10-year starts to go up and gets above the 3-month, that could help. And, you know, the big number people are looking for is for the 2-year to go higher than the 10-year, which it's not there. That's like the number one economic indicator. However, what I was bringing up today, this is the federal funds rate. That's the 3-month. It's held and mandated by the Federal Reserve. So the fact is every single bond up until the 10-year is below the Fed fund rate. That's hurting any banks. It's hurting even the operation of financial businesses. So that's why you saw the what's it called? The bank stocks went down, some went up, but I played Citi and all that. I actually sold out of those and got some Bank of America, and that's pretty much it. But I'm going to talk about that in the watch list, but that's what happened today. That's what caused this, and the market gave us these warnings now because if the rates keep going up, I said if we closed above 125 on the TLT, and pretty much if the 10-year stays low and we don't see any sort of reversion, and I think what could cause a bounce and what could help is if the 10-year starts to run up and the TLT drops and we start to see some of those long-term rates come up, the market could digest the temporary yield curve inversion and go from there like it has. However, the biggest scare from here is that if this keeps going and persists, or even the TLT drops, but then the market starts digesting, that could be the negative aspect to it. So that's what I'm keeping my eye out on for, because as that progresses, that's going to change some of the scenario and let us know. But watching rates, watching the overall markets, and like I said in the watch list video, leaders and laggers. So there's that. Some people wanted to talk about too, they said the Michael Cohen, not the Michael Cohen, or the whole Trump getting exonerated with all the Mueller report. I think, some people said it had no effect or the yields were outweighing it. Truthfully, if you guys look back, we saw the market make a few pops here and there on the Mueller report. But at the end of the day, the market never really went too crazy over it. Pretty much right when trade came back in, that was the issue. So again, as trade comes in, the yield curve, and then now Brexit, again, it's getting a little dicier in that position, and Brexit's getting a little bit more convoluted, but the main thing I'm going to look for here is currency moves. So I'm going to put it in the watch list tonight, show you what I'm looking for, but as the currencies, banks, and then the yields, but ultimately whatever happens with the currency and now the yields affect currency, even watch gold, as all of that stuff starts to move, that's going to give us more insight. But that's what happened today. That's what happened in the stock market. That's why we had these moves, and those are the warnings. So I love y'all guys. Better see you on the stream. Subscribe, like the video. Let's go.